So what is the best way for a director to initiate discussion on potential impact of blockchain on their company when management is not bringing it up? So.
Yeah, I think, well, it's back to this point that, you know, I do think you often hear in some boards a sense that it's, you know, management own strategy. And once again, you know, given the sort of succession issues with CEOs, I fully falls to the board. But I think, you know, something for the board to discuss in private session and for the chairman to, you know, put it on the table as a board agenda topic, perhaps inviting, you know, I mean, the board can invite third parties in to give them a view of what the challenges are. The board can ask management to put this topic on the board agenda. The board can call a special meeting for, you know, as long as it likes, to thoroughly sort of kick the tires on new technologies and how they affect the company. So I think the board has immense power and authority and actually responsibility, fiduciary responsibility to get these issues on the table.
And if I could add to that, Alison, Alison and I wrote a couple of books, that one of you, which is on blockchain competitive advantage, but the other book was on corporate innovation. And the right way to engage your management team and board is not with the technology. So you shouldn't even be talking really about blockchain any more than you should talk about TCP/IP. You begin it with the customer and competitors. And so, you know, going back to the dot-com boom, I was the head of strategy and corp dev for Gap. And we had fundamental challenges in the business, such as when most people walk into a Gap store, there was a pretty good chance that we would be out of stock on the specific SKU they wanted, the product, the color, the size, especially if you were an odd size. If you were like me, most of the time, we wouldn't be in stock on your size. So we realized that having Gap online, gap.com, gave us the opportunity to be always in stock and a couple of days away. And that was a breakthrough. So we launched gap.com and we quickly became the world's largest specialty retailer online. Of course, Amazon came by and blew us out of the water. But the point is, it began with a customer insight. What is the customer need that they are experiencing today that your company always bangs its head against, that these new emerging innovations can solve? And then the other one is competitive, which is to say, you know, if you're in the automotive industry, you had to be blind not to notice that Tesla was building out a global rapid recharging network. And they've been doing it for years and you didn't begin, right? So they now have a massive barrier of entry on electronic vehicle charging globally. And how many automotive companies will ever be able to catch up? You know, because how many rapid charging networks will the physical world support? It won't be 20. So that's the second vector. The second vector is look at the competitors in your industry, watch how they're applying these innovations, and then ask yourself the question, is there a risk here that they've seen something we haven't? And I think, you know, Alison and I would argue that as a board, if you ask your executive team to constantly look at the unmet consumer needs and constantly be paranoid of competitors doing things that you're not, in that mix, you will see the applications of technology and innovation that are worth pursuing first. And I know about 6 of you are on bank boards. Well, there is a reason why the world's biggest banks are now wholeheartedly driving against blockchain and digital monies and assets. And there's 10,000 banks in the world, and about 9,950 of them have not even begun to think about what the big banks are about to do to them. And the same is true in asset management, the same is true in payments. So this is not, the world's most sophisticated competitors are now firmly on board with what this, you know, this central thesis. Blockchain is just software. And when we design software, we have design choices. Those choices could be, for example, how secure is it? How immutable is it? How public is it? How easy is it to access and share? With the Bitcoin blockchain, those dials were set to 10, all of them. So it is the most secure, the most immutable, the most transparent, the most public. And in order to get the software to meet all of those parameters, it also consumes a lot of computing power, which turns into energy usage too. But those were design choices. So Mark talked about Hashira hash graph. So Hadera hash graph, and it's a strange name. They have their design parameters set in a different place. So going back to the question of privacy, a fully public, transparent blockchain is not a very good device for maintaining privacy. And so if you're thinking about corporate applications of blockchain, you're probably going to modify the design parameters. You're going to say, well, we want it to be less public and less transparent. And so you're going to end up designing a slightly different blockchain. But you can do that. This is just software. And in that sense, it's a choice. So taking it from the top, the questions around privacy are societal questions. We are in the middle of global dialogue around how much privacy do we want in business, commerce, and in our own private lives. Blockchain can increase transparency, but it can also protect privacy depending upon what type of blockchain you choose to use. And at the level of the business you represent, those are going to be design choices you're going to have to make regardless of whether you use blockchain or not.
So there's a recent PricewaterhouseCoopers study that estimated that blockchain would add 1.76 trillion to the global GDP by 2030. I think that's really a little bit of an underestimate, but like all 9-year estimates, you have to be cautious about it. What I think is interesting is where they saw in the opportunities. And the first and largest, $962 billion, was provenance, which is a fancy word for saying supply chains. And as a matter of fact, I was speaking to the Association of Ball Bearing Manufacturers on this point, because I didn't realize it before I spoke with them, but ball bearings are having a lot of problems with counterfeits, which I think is a problem across many industries. And the things that you sometimes don't want to know are that there's a lot of counterfeits that are going into airplanes. So when you're flying, you should hope that blockchain will help reduce the number of counterfeits to zero as far as plane parts go. Payments and finance, which I think Matthew mentioned, that Alison also mentioned, is going to be a big issue at 433 billion. Then identity at 224 billion. I mean, think about our current identity with driver's licenses and how subject to fraud that is, and then contracts and discounts, and then customer engagement coming in at sub 100 billion. But I think particularly any company that is consumer facing has got to really think seriously about a blockchain strategy, particularly NFT strategy. We're working with a number of sports teams that are trying to decide how do they digitize their offerings, because for those of you who are sports fans, you'll know that many of you may have scrapbooks of your tickets or your programs and stuff. Obviously, that's all now digital. NFTs offer you the opportunity to recreate that experience digitally and actually go beyond that. For example, you could have an NFT that acts as your ticket, and then if you come to the stadium early, say, oh, why don't you get a discount on a t-shirt, or why don't you get access, you want to pay and buy another NFT, or get access to a special green room, or things like that. So everybody who is in sports and in entertainment is thinking about these matters. There's also, and this will be in materials that get distributed later, a chart from McKinsey talking about how blockchain is going to affect various industries with varying degrees of impact. And I think financial services and entertainment are two of the ones that are going to be most impacted. But everyone has a supply chain, and I think those supply chains, as we've discovered during COVID, are very fragile. And I think blockchain offers an opportunity to make that resolution. I will say, as important as blockchain is, it's not a silver bullet. It doesn't solve all problems. And certainly the technology now is somewhat immature. And so you shouldn't just assume that blockchain will solve every problem that you have, but it does solve problems, particularly ones that don't have a good solution now. Some of it, once again, in the deck you'll be seeing, there's a chart about the sorts of problems where blockchain can be most effective. For example, is there a requirement for verification? Are there multiple stakeholders that are involved? For example, I'm working on a blockchain consortium for major oil companies that's going to track trading of oil and natural gas. And then, is this a business where they say they cross trust boundaries? In other words, different players, people outside of a single company. And are there intermediaries that can be removed? I think that's particularly challenging for people in the financial services business. But when you also, there was a very good report by BCG talking about what they see as the 4 basic types of opportunities. One is new business models. For example, I mentioned NFTs and sports teams. The NBA put up a trading platform for NFTs. There's in October, soft launch in August, but they've had over $250 million in trades. It's a little difficult to tell how much the NBA has made, but they basically think of these NBA moments, which are basically 15 or 30-second videos dressed up in a sort of a digital framework that has are sold and traded like baseball cards. And these are videos that you could get on YouTube for free. So that's a new opportunity. And then you've got operational efficiencies. The ball bearing manufacturers were very interested in that because of the challenges in their logistics supply chain, risk mitigation, once again, particularly in the area of fraud, and then social impact, tracking things like blood diamonds and things like that.